silver's fundamental value at this moment is somewhere between 1,300 and 2,000. And remember, the more of this that they do, the higher those numbers go, because this is fiat money, government debt-based money. But gold and silver are sound money. Sound money is money that governments and central banks cannot inflate away. I see that both on the spot market for both gold and silver, them coming to a critical point. With gold, what I'm seeing is a series of higher and higher lows as the top end have been kind of bouncing against it about 3 or 4 times. So I expect a breakout within the next reasonable period of time, short period of time. With silver, it's probably even a little bit more exciting because we are now really coming to that $40 and the next bump is at that 50. And when it goes above that 50, what you'll see on the spot silver chart, especially if you zoom all the way out, is the conclusion of a double cup formation, which is a cup formation is a major accumulation pattern. A double cup is, I imagine that to be quite powerful. So, I think that could happen maybe by the end of this year or into the first quarter, but either way, on both the spot markets, I see them extremely strong. And I think that a lot of that has to do with the level of chaos, the level of inflation, the level of geopolitical issues, many issues that are swirling around right now, central bank independence, all sorts of stuff.
When it comes to silver, obviously a tremendously undervalued metal by all metrics. And a lot of people are talking about $50 silver as the number, which would get us back to nominal previous all-time highs. But if we look at 1980, $50 in 1980 is like $196 today. And even if we go back to 2000, even if a lot of people say 1980 didn't count, that was an event that occurred, the Hunt brothers short squeeze, that wasn't a normal natural rise in the silver price. Some people will argue that, and they say we have to use the 2011 high as the more accurate one. Okay, but even in that sense, we're still looking at silver over $100. Do you think that triple-digit silver price is in the cards in the near term? What are your thoughts there?
Yes, I definitely do think that triple digit price. Now, one thing that you mentioned about 80s with the Hunt brothers accumulating silver, because they wanted to leave the US and form their own little country in Texas. However, the importance of that should not be just trivialized or ignored, because what we were really dealing with was an overt manipulation by our government of the silver markets. And everybody was warned. And I have to say, Jesse, I have often wondered when these things that happened and they seem outrageous to me, like taking the gold away from the population, like taking the silver away from the population, like a sitting president admitting that they're going to manipulate the markets. And I used to wonder how they could get away with that, why people didn't rise up and say, no, you can't do that. That's crazy. Well, I think we're living through that right now. And I'm seeing it happen. I think there's a lot of blindness that's going on. So I do actually consider the $50 mark nominal, to your point, to a very valid point, because these markets are manipulated. They are admittedly manipulated. And so if anybody really expects there to be any level of good price discovery with spot gold or spot silver, and I always make sure I say spot because that is just a contract. And when you're talking about silver, there's a chart from the LBMA that they came up. And of course, we know that there was a huge rush of physical coming into America at the beginning of this year. And you can see the stores in the LBMA dropping in gold, dropping and then rising again and coming back pretty close to the levels that they had before whatever came out of the LBMA. I'm actually more interested in what came out of the BOE, but let's just stay with the LBMA for a minute, because the same kind of issue with the physical metal being shipped over happened with silver as well, but their stores are significantly lower than they were before that physical push into the US. So what does that tell you? It tells you that silver gets used up in industry. And just like the SLV silver ETF that is supposed to be a basket of silver, they couldn't put the basket together. So back in, I don't remember whether it was 21 or 20, but they changed the prospectus. SLV changed its prospectus so that they didn't actually have to pull a basket of silver in, but rather all they had to do, which is what they were designed to do anyway, which is imitate the spot silver market. That's telling. When you're talking about silver, that is so telling.
Well, one of the knocks on silver versus gold has always been that central banks are not buying silver. We've seen an interesting development. It's not as exciting as some are maybe making it out to be because it involves the SLV ETF that you've just been mentioning, but the Saudi central bank did recently purchase 932,000 shares of the SLV ETF. Fascinating development. I'm wondering what your thoughts are and if this could potentially be a trend moving forward where we see more central banks look to get exposure to physical silver.
I think we could see that because silver is the secondary monetary metal, but it is rather, I'm pretty sure that Saudi Arabia would be considered an administrator, which means that they would, you and I can't do it, but they would have the ability to take possession of the underlying silver. So I think that that is a manipulation to make that happen, because that can happen even more invisibly than what we were just talking about. And since silver is used across every single sector of the global economy, in solar, in medicine, et cetera, and gold is as well. Both of them are, but silver more so straddles that world. I think that this could also be a maneuver to ensure that they get their hands on the physical silver. At the end of the day, the holders of SLV won't. I mean, the normal holders of SLV wouldn't, but JP Morgan would and Saudi Arabia would. So I think it's a backdoor way to do it and have control of it. But the real problem is it would have to be done strategically. Like I'd be curious to see how much of a percentage of the holdings that they already have in silver that would actually represent. Because if they did take out the physical at the same time that SLV itself, that trust, is selling off bits of silver on a daily basis to pay the rest of the fees, the repercussions for the public would be huge. Those that think that they actually own silver with an SLV, they don't. They just own shares in a trust. But that could have some really significant significant impact on the risk transfer to the public.
Yeah, great point. Silver also recently added to a strategic minerals list by the Department of the Interior in the United States. Recently added, platinum also added as well. I wonder what your thoughts are there, if you think that's going to impact the silver market in a meaningful way.
You know, as long as derivatives exist, right? So silver futures where they can create as much silver as possible. But then again, remember, we're coming to conclusion, and I do consider what happened in 1980 at that $50 mark. I consider this a massive double cup because it did come up to breach that level. And so when it goes above that 50, you know, would 3 or even 4 digits in the silver nominal price, the price that we see, would that be outrageous? No, it's worth at a minimum $1,300 an ounce. And that's just based on the 20th to 1 that historically we were. These were both, well, it's peace dollar. Okay. These are both $1, little $1 gold coin and a silver dollar. So that's a 20 to 1 ratio right there. So according to my calculations, you're looking at the true fundamental value of an ounce of gold at somewhere between $33,000 and $40,000 an ounce. But that also then means that silver's fundamental value at this moment is somewhere between $1,300 and $2,000. And remember, the more of this that they do, the higher those numbers go, because this is fiat money, government debt-based money. But gold and silver are sound money. Sound money is money that governments and central banks cannot inflate away. They can manipulate what you see through the use of garbage derivatives, but they cannot inflate it away. The point is they are both money. They're just the opposite sides of that money coin. And as this loses more and more and more of its purchasing power value, these go up in nominal terms. But what they really do is they create a bridge, because when one currency goes away, another one comes in. It's just that you need something and I need something. We need something that will hold its purchasing power intact to get us from one system into the next system. And dare I say it, even have the ability to take advantage of the opportunities that will present as these extremely severely overvalued fiat money assets. And real estate is actually not pure fiat money, because it is a tangible as well, but it's severely overvalued. That's going to flip flop. So if you can hold your purchasing power intact, you're going to be able to have that wealth transfer your way.